Today, I wanted to share with you guys why I think San Diego multifamily real estate is the best real estate market for anybody on the planet right now to be investing in. I know everybody likes and loves my Florida real estate, Texas real estate, Georgia real estate, um, North Carolina, South Carolina, the Southeast. I do too. Don't get me wrong. But when I think about an investment and being on the front end of something, I believe California, because everybody beats up on California. I'm going to go over my reasons why in a minute. But why I believe San Diego, as it relates to California, is the best real estate market to be investing in. And it will be that way over the next at least 10 to 15 years if you get in early. You can buy the best real estate in the best locations, period, in one of the best cities in the country. And you need to do it now, though. And I'll go over why that is. First, I'm going to go over why I believe California real estate, and I'm talking about multifamily real estate. I'm not talking about single family houses. Those are nice too, but you're not going to buy a single family house in San Diego and then treat it as an investment. Unless you're wholesaling it, flipping it, you're going to be in and out. There's a lot of things happening right now that are going to change that, as you guys can tell, because they've been talking about it on CNBC about the 10-year Treasury. The Fed's holding off from lowering rates right now. The Trump tariffs, what's going on in the rest of the world, the wars, the fires, you name it, it's happening. But this all affects real estate where you live. Real estate itself is a local investment. So if you're going to put your money in a place, your family's money, long term, where do you want it to be? I would say San Diego real estate is the best right now. Here's why. These are some things I think about when I'm thinking about investing in multifamily, especially if we're going to be raising money, syndicating, or using our fund for deals for, 200, 300 unit apartment buildings. Great A locations, institutional quality assets. I'm not talking about fixer uppers. I'm talking about parking money and treating these real estate pieces like a bank, these real estate properties like a bank. So, number one thing that I look for are high barriers to entry. Now, there's a couple different things about San Diego, and I'm talking about San Diego as a real estate market, and then I'm going to talk about San Diego real estate. So, the number one thing that I'm going to talk about for barriers to entry is San Diego as a city, right? San Diego, the whole county, right? So, I'm talking about Oceanside, Escondido, the Del Mar area, Solana Beach, all the way up through like Imperial Beach. And if you're from California, you know what I'm talking about. San Diego County is a massive place. There's 3 million people here and probably more that aren't accounted for. So, because like that's just the reality of a thing, right? So, the barriers to entry. Here's what I look for when I'm thinking about a market to invest in. It has to have high barrier to entry, and it needs to also make sure that the value of the assets, the value of the real estate stays up. So in San Diego, you have ocean on one side, mountains on the other, and in San Diego, all nestled in the middle. Like, so I was an investor in Hawaii real estate. I was there for 17 years. What better hedge to make sure that the value of your real estate never goes down and it always has perceived value than to be ocean around it and then mountain, right? And that's what San Diego has. Now, the further inland you go, you start realizing that the values of the real estate starts to drop down some. You start pushing out into like Riverside and all the other stuff. People love those markets because what they're trying to do is invest on a budget. We're not investing on a budget. We're investing for long-term growth in real estate that cannot be destroyed, it cannot be disrupted, and nobody's going to be able to take it away. Someone's always going to want it, right? So that barrier to entry by itself, if you're like, okay, there's an ocean on one side, the mountains on the inside, on the other side of that, and then you have all of this very high dollar desirable real estate. That's what I look for when I'm looking at a market. San Diego County has that all the way through, right? So then the other piece as it relates to the barriers to entry for the real estate itself, there's not a lot, right? There's not a bunch of like there's probably, I don't know, 200 plus real estate properties that are like 150 units and above. They're building more, right? Because this is they're building the right amount of units. I think there's 4,000 units coming to market. I'll talk about that in a minute. But there's not a lot of assets. Anywhere you start building 100 units, 200 units, 300 units as it relates to that level of assets, we get into a supply and demand issue as well as an age issue, right? Sorry about that. That's going to keep going off because I want to share this with you. This is so important. It's not even funny when you think about where you want your money. So the barriers to entry, one, the ocean, the mountain. Then it protects kind of creates this barrier around all the assets. The assets itself, there's not a lot of them. This is a supply and demand thing. That's why the real estate in Hawaii is so valuable. Where they're not going to do any more. And they build those things. So the same people will continue to own them, just like in San Diego. It's the same companies that are going to go and buy these big institutional assets. They're going to trade in and out because they know, hey, it ain't going anywhere. That's what I look for. These very specific barriers to entry. One with the city, two with the assets. All right. So the next one is it needs to have great economics. Economics meaning like there's money here. Period. When you think economics, you think, hey, there enough money in this market, right? What do the jobs look like? What are there jobs coming in? I know people are like, oh, people are leaving California in droves. Not San Diego. People are leaving maybe San Francisco, maybe they're leaving LA, but there are a lot of people are coming right here to San Diego, right? And if they're not coming to San Diego to live, they're coming and they're dumping money here. They're renting here, they're vacationing here, they're bringing their families here. They're spending money in restaurants. They're getting married here. A lot is happening here. So there's major levels of economics. So you have the military bases. My folder keeps falling, man. I love that because I see it. So you have the military bases. You got Pendleton. You have the Navy base. You got the Army base. You got the Marine base here. You have all the military here, right? So you have the Coast Guard here. You have the largest defense contracts in the world in California. Period. Like in San Diego, it is set up here. You have major agricultural things going on here as it relates to the agricultural components of California, and it does have a very heavy outlay here in San Diego. You have what's the other one here? You have very high from a health perspective, the health industry, very specific here. You have some of the best like Scripps Hospital, Kaiser. You have some of the best medical here, training facilities here. You have San Diego State University is here. What's the other one? We have a lot of services that serve those people. So a lot of people just think in the health industry, you just think medical, but who serves medical, right? You have pharmaceutical stuff here. You have technology, you have the big tech, and you also have a very high concentration that very few people talk about, right? Aside from life sciences and biotechnology, is the venture capital space is really moving here. You have a lot of venture capital associated right here in this market, as well as financial services. And then what's the other one? There's one more, but you get what I'm saying. There's enough money here. Like on the average, the average income and or job from that perspective usually ranges anywhere from 100,000 anywhere to probably past the $250,000 range as it relates to people getting jobs and their income based on their employment. That's just employment. This is a heavy hub for business owners, entrepreneurs coming here because they're like marketers, they're investors like me, they're contractors, they're doctors, they're chiropractors. They're in every industry that you can because San Diego is a major hub for business, economic growth, and whether you know it or not, they invite businesses here. They're like, hey, come and do business here. Regardless of the tax situation, no one's bitching about it. I promise you, you come here, you talk to any business owner, and they're going to tell you they're happy. The quality of life is great here. The schools are great here. Their kids are happy here. The sun is out all the time. The beach is right around the corner. The economic component and the lifestyle that goes along with the people who come here to work is massive, which makes real estate like if you're investing in housing, multifamily real estate, people want the housing here. They want to rent. They want the amenities that come along with the type of assets. So that's why San Diego real estate as an investment vehicle here is one of the greatest markets you're ever going to invest in. The next one, supply and demand. It is, some people complain about the issues that go along with government red tape in real estate here, how hard it is to build, how hard it is to get a permit. But let me tell you, knowing that some of the most challenging red tape to get done in any real estate also makes the real estate more valuable. Because if you can't build it, then if I own something, then I can sell it or I can market it as a premium. You can't do that if you're in a city like Houston where you can build a apartment building next to a elementary school, next to a strip club, next to a liquor store. Like that's happening. Right? So some of that problem that you will have in the supply and demand challenges here is actually to your benefit when you're talking about San Diego County, San Diego multifamily real estate as an investment opportunity in this specific real estate market. All right. So when I just did some research a minute ago, it said 4,000 units are coming to market. I feel like that's extremely low, but they're talking about the absorption rate is also like out of hand with that. I know that right now there's a lot of real estate not available. It just being built and it's going to be completed. There's going to be a lot of completions. I think it was 4,000 units coming to market in 25. Here's the problem with that. Once those units gets absorbed, and they're going to get absorbed. Here's why: is because the vacancy rate on most apartment complexes here in San Diego, the vacancy rate is somewhere around 4%. So you figure if you only have 4% on a vacancy rate, let's on 100 units, you only have 4 units down. That's not a lot of units. When those get absorbed and you have a bunch of new units come on, those are going to get absorbed too. Here's the problem. If 4,000 units are coming to market and they're going to be completed in 25, I don't think a lot of people got their permits and stuff like that approved for from 2024 and 2023 because the interest rates on loans for developers was out of whack. Nobody can get financing for those things. They actually either stop projects, building, or they're waiting. So you figure anything that's getting built now is going to be done. 4,000 units, great. They're going to start applying for permits now in hopes that they're going to be able to build and have their permits and stuff like that completed by the end of 25, moving into 26. Their developments are not going to get started until 26 and finish maybe let's say in 27. That means there's going to be a lack of inventory, period. So the rental units will get taken. There's no units coming on market, and there's nothing that's going to be completed to be built until probably 27, which means that rents are going to skyrocket in 27 because now they're going to have this glut of some new product while people are also trying to trade out of their old product, right? So the supply and demand issue is actually to your benefit as it relates to not a lot of product coming to market, not a lot of product available, and not a lot of people need to sell because there's not a lot of vacancies in their units. That is massive when we think about it. I can show you in Texas right now, I think they're bringing on 45,000 units, and only 5 or 6% of those properties were, wait, it was 9,000 units. Sorry about that. 9,000 units were getting delivered. I want to say that was last year, moving into this year, or somewhere in there. It's got to be more than that. It seems so low. But only about 5% of those things are going to actually get absorbed. I know a buddy of mine works, and he works for Greystar, and he was talking about they're developing a building downtown, and he's at another property now, and they're like, dude, we have high vacancy here. It's like 15%. And that's new product. So imagine what's happening in these other cities that is not happening here in San Diego. And be honest with you guys, it ain't happening in LA either. You can poo poo on LA all you want, but California real estate is still some of the highest priced, best located, highly desirable real estate on the planet. No matter what Newsom is doing, no matter what the mayors of all the cities are doing, no matter the fires, no matter the wars, period. We're talking about very simple supply and demand, all the metrics as it relates to making real estate a great investment for your money long term. All right. So the next one is the income levels of people, which I also went over in economics. Most of the people here make decent money. $80,000 to $300,000 as a household, and then pushing all the way up. If you're a business owner, you hear me talk about the stats about business owners. Nine out of 10 business owners make less than $1 million a year in revenue. That's an average across the United States, but that is not California. The pricing and all that other stuff is a little higher here. People function a little differently here. So if you are in a business here, 9 times out of 10, your business is actually doing better. If you are in a functional business where you're pushing the economics and the income of the people who are here, they just have better incomes, right? It's a higher price area, so people end up getting paid a little more. And also their economic component of the jobs allows people to, if you're a business owner, you're going to find business. If you're an employee, you're going to find more work. And you're going to find work that actually pays you because people are always looking to continue to expand here. It's very different. All right. So as a real estate perspective, when I'm thinking about investing in a market, investing in real estate, I'm like, hey, can people afford? Because the average rent in San Diego is anywhere like 2,000, 2,500, all the way up to $3,500, which is nothing to sneeze at. That's a two-bedroom apartment. Now we're talking nice, great amenities, A-plus location, newer asset, less than 10 years old as it relates to the multifamily real estate. That's on the average, but that rent is also going up. it goes up on the average here about 5% a year at that. So you figure if you're at $200 and it goes up 5%, that's another $100 that somebody is already expecting, and that's baked in to know that when their leases expire, if they have a great management company like Greystar or some of the other people that are actually managing assets, or the companies that are managing assets that are being responsible with the management, right? That is already expected, and that people know that they're already budgeting these things in their income, in their generation of income and revenue. Now, some people are going to argue, no, they're not doing that. Well, let me tell you, they are. That is how Californians think. That is also how Hawaii people think too. The tenants, because we've had tenants there. They know, hey, our rents are going to go up. We need to budget for these things. We need to make these things happen. We're not talking about most of the tenants in San Diego are responsible. Like, I'm talking about nice assets. I'm not talking about old beat up properties that nobody's touched these properties for a long time. I'm talking about the tenants already know, right? Which leads me into something that I wanted to go over, because I think this one will really hit home for some people. I want to change your mind about some stuff. So let's talk about a little bit of the things that I look for, why I like real estate in California, San Diego County to be specific. And this is something that I learned in Hawaii, doing deals in Hawaii, because there is red tape associated with investing in real estate, right? As it relates to the government, the city, the federal stuff. But here's what I noticed. If there is red tape, for example, we'll talk about rent control. California has rent control. If you haven't noticed, if you're being an investor, all the cities that implement, or the states that implemented rent control, is their real estate more expensive or less expensive? Did it make renting there more expensive or less expensive? It made it more expensive. Why? Because if you have someone move out and there's rent control there, I have the responsibility, based on the controlled amount of rent, the ceiling that they'll put on me, that I can raise rent based on where things are. I'm going to raise it to that level, and I'm going to continue to raise it to that level. So let's say, for example, there's a 5% um, cap on raising the rent. Hypothetically, let's just say I did it on that. Like we said, $2,000 a month for rent. If that's a affordable rent in a great location, and I raise it $100, the next rent bump, I can only do 5% of that. It's a compounding 5%. That is still happening. So if I'm constantly doing that, I'm okay. It actually benefits me. It benefits the tenant. So now we can actually take care of the taxes, the insurance that's constantly rising. Like that actual limitation is a plus, not a minus, right? So the problem with the rent control, the problem with the permits, the problem with the insurances and these things, these all actually insulate the devaluation of the assets, and raises income, raises the value of the assets, not lowers them. It causes a supply and demand issue. It causes less investors that don't understand the demographics and the complications of those markets to stay out of them, right? That's important for you to know. Think about New York City, Manhattan, rent control. That's the most expensive city on the planet. One of them, right? California, expensive cities. San Francisco, LA, San Diego, like I want what Oregon, all these different places that people talk about that have rent control. Is it expensive, or is it coming down? It's not. And if you invested in those areas, you have great location, great assets, you park your money in there, you're in it for the long haul, and you actually use some of that red tape to your benefit as it relates to your investments are concerned. It actually is to your benefit if you're doing the right thing and you're being ethical in as it relates to the investments that you make, right? We're fund managers. We're in the private equity real estate space. So we are operators as it relates to making sure that if we get into an investment, we're going to make sure that we value our investments correctly, and we're able to cover the cost, and also to pay our investors their returns based on raising the income of those assets. And that has everything to do with the things that some people stay away from, considering it red tape. All right. So here's the other thing. Uh, this is why I believe San Diego County, I've said this a long time ago, in the next 10 years, may take 12 years based on what's going on in the world right now, is going to become similar to what you see happen in Miami. All right. So at Miami, the Florida market, people are going to move their money here because it's no different, right? I saw this in Hawaii a long time ago. I wish I would have bought more property in Hawaii 10, 15 years ago and held it than I ever did, because when I moved here, I saw it. People made a lot of money in California and they pushed all their money into other states. They went from Arizona, Vegas, then they went to Texas, and then they went to Georgia, North Carolina, South Carolina, and then they pushed down to Florida, right? So here's what happens when the market tanks or people get shut out. They go into these they make a lot of money. They refinance or they sell all their assets. They got a big hunk of money. They go, hey, we'll get a better bang for our buck in this other market that's supposed to be an emerging market. But what happens is they're really the emergence of that market because they're pushing money there. Jobs move there. They dump a bunch of money there. They fix up a bunch of properties. People occupy those properties. Then they keep moving it all the way down. So here's what happens. The market shifts. They get rid of those properties at a discount, which is what you see happening, right? And then they drag their money back to where they made their money from, which is California. And then they get locked out if somebody's already bought. Then they have to pay a premium for those. California market shoots up again, and then they buy because they have to. They got to park their money someplace. Guys like me that bought a bunch of property say, fine, we'll do it, but then I'm going to close and I'm going to rip your head off, make a bunch of money for me and my investors. And then we're going to start this cycle all over again. All right. Then all of a sudden the California market is more expensive. They make a little bit of money and they forget what happened and they start moving their money back across the United States all over again. It's a cycle. See, here's the deal. If you think about this as strategic, the theater of war, what happens when a army leaves its territory and goes to sack another territory? If you have a confronting army that goes and attacks the territory that is now left unattended, you can easily conquer that area. And then that other army that left has nowhere to go back to, and then they get defeated. That's what happens in every market cycle, if you haven't noticed. But it's not on the little deals, it's on the big deals. It's on the real estate that you say, okay, all the institutional money left this area. They still got some assets. They're going to exit because they need money to capitalize on this other one. They're going to buy a big stake in this other market. So if you can get in, guy like myself saw this. I'm like, hey, I'm going to start Bell Capital. I'm going to go help the everyday retail little guy investor. We're going to start buying some of these big properties while these guys are looking the other way. If you notice, now institutional capital can't play. They're stuck in a market. They're stuck in a deal. It's on their balance sheet. They can't spend any more money. They can't go get financing. So the best thing for them to do, they're not going to sell their bad stuff. They can't. They can't sell their bad stuff and take a major loss. They got to sell something good that they would have never sold, that they have a lot of equity in, that they're going to make a return on so they can cover their bets on the other side. That's where guys like myself, guys like you, people who want to play this game with us at Bell Capital, other investors that want to look at a great market, great assets, that's how we're going to win over the next decade. But if you aren't willing to play this game, if you can't see what's really happening here, if you're just chasing the money rather than watch where's the money made, where did the money go, where are they not paying attention anymore? If you can't see that, then you don't know where to go. You're going to go where they go. You can't compete there. You got to go where they no longer are competing. They own right here, but now they're kind of competing against unknown factors and they can't do it. They just can't do it. All right. So that's what I wanted to share with you guys. Why I think San Diego County is the best market for you to invest your money in. Long-term holds, multifamily real estate, A-plus locations, institutional quality assets, multifamily only, right? With the properties that are newer assets that the rents are still affordable, that there's still room to grow in rents based on inflation, not you forcing them. You don't need a heavy value add deal right now. You're getting the same returns if you bought what's considered a value add deal, something you got to buy and fix up, or you can buy something stable with the same returns with no work. You just have to dump your money in there and be patient and ride the wave of growth because of lack of inventory, which is what's happening right now. So the 6 things, the barrier to entry, that's number one. High barrier to entry, San Diego County, I love it. Oceanside, pushing all the way up to Imperial Beach. Like you can find great assets here if you stick with the San Diego County. Man, even all the way down to San Clemente and Irvine, all the way down from Mission Viejo, like those are the areas you want to focus on. That's what we're looking at right now. And looking downtown in San Diego. I'm downtown in LA. Some stuff is coming up that didn't. There's something happening in LA. I'll let you know what that is. Not LA fires, LA downtown institutional quality real estate. A lot's coming to market. I think something's going on, man. There's going to be a big opportunity. So the next one, great economics here in San Diego County. Great economics. There's money here. There's businesses here. There's jobs here. It's still happening. More is coming. Regardless of what you think, regardless of what you hear, this is a great opportunity for you to expand and grow your business here. It does have the economics and it relates to the real estate and being an investor here. Next, the supply and demand. They can't match with supply and demand. There's 3 million people here. Well, it's 2.7 million, but there's 3 million people here just in SoCal alone. right? And I think there's 32 to 1 as it relates to the ratios for apartment buildings here. That's crazy. So the next one, the income levels. People make enough money here to be able to afford $2,900, $2,000, $3,500, $4,000, $10,000 a month for rent. Not ownership, rent. The disparity between renting and ownership is crazy. So most people are usually choosing to rent here. All right. Next, the red tape. The red tape is a caveat. The red tape is like a bonus because if you can't, if you, hey, rent control, stay away. Good. Man, you can't get a permit for something, stay away. It takes forever. Good. Stay away. That limits competition. Look, if you don't know that as an investor, then you will stay away from it because you're doing what everybody else does. You need to go where the big players go, and big players are not, they're not running from this market. They love this market. They just can't get in. But a lot of them are starting to turn the corner. This is the time to buy. So if you're thinking about any market, this is why I love San Diego multifamily real estate as a market. It is going to be the #1 market over the next decade. Watch this video 10 years from now. You'd be like, man, Vic was right. I'm happy I invested with him. If you did. Or worse, hey, Vic was right. I wish I would have invested with him. Whatever that is for you. Or if you go do this on your own, I don't know. But I wanted to share the information. I think this is worthy of talking about. I'm in the trenches. We're boots on the ground every day with all of the information, talking to brokers, going to assets, going to deals, making offers on properties, talking to investors, boots on the ground. You got to get your information from the streets. You can't get your information from this all the time. The real estate is one of these things where you got to see it, right? All right, so look, I hope this helps you. Like this video, share the video, comment on the video. Leave me a message in the comments. What did you take away from this? If you're in San Diego, do you agree? Or if you're not in San Diego, do you agree? Like, tell me a little bit about your market. I want to know. So, but like this video, share the video, comment on the video, give it a thumbs up or give it a thumbs down. Don't be a hater and a hider at the same time. Man, do something. Oh, subscribe to the channel. We want to get our subscriptions up, our subscribers up. We're here for you. And if not, go to bell-capital.com. We would love to talk to you. Answer any questions you have about investing. We're here for you. Or you can text DEAL to 760-531-8500. And somebody from my office or myself will get back to you, answer any questions you have about investing or any deals that we're working on. All right. So you guys have a great day today. Let me know what you need. And boom. Are you an accredited investor with $300,000 or more liquid in the bank? I want you to come and partner with me. Look, if you love real estate, passive income, and positive cash flow, appreciation over long periods of time, and you're willing to be patient, come invest with me. Go to bell-capital.com. This is for accredited investors with $300,000 or more in the bank, ready to go. Come invest with me. Go to bell-capital.com.